Hi, everybody. It's Jose Luis Morales with Jose Luis Morales Real Estate Group. Welcome back to the Jose Luis Morales Show. This is episode number 12. Today we have a very special guest. His name is Chris Powell. He works for Commercial Loan Express. He does investment loans, hard money loans, and a couple of other things. I wanted to bring Chris Powell on the show. The reason is that when I was first getting into doing flip properties, it was really difficult for me to find good hard money lenders. And essentially, I found out that I really didn't understand the process. And I realized that a hard money loan has a specific purpose. And if you can structure it the right way, there's an opportunity as an investor or somebody in a specific situation where you can make some money. Welcome to the show, Chris. How are you?
Doing really good, Jose. Thanks for having me on.
Good, good. So once again, the reason I wanted to bring you on is I wanted to share a little bit more of information. Maybe some people have never heard about what a hard money loan is, what a hard money loan does, and when to use it. Do you mind explaining to us what is a hard money loan?
Well, simply put, it's a loan that a bank won't make. So, banks typically they originate a loan and they'll recover their costs over, a 5 or 6 year period. Whereas a private money loan, we make all the decisions here, and it's very short term, usually 6 months to 24 months long. So that's kind of the big difference is a bank won't make the loan, we will.
Okay. And under what circumstances can an individual benefit from maybe using a hard money loan? Like what do most of your clients use hard or private money loans for?
Well, they're for business purposes, so it typically it's for acquisition of investment property.
Mhm.
So they need quick cash to close. They're going to improve that property. We might loan them the fix up money,
Mhm.
and then they're going to either hold that property as a rental or whatever business purpose they have for it, or they're going to sell it for a profit. So we come in, we do something very quick, very fast, and then they exit us. Within, like I said, 6 to 24 months is usually the longest that the project makes sense to have private financing on it.
Absolutely. So the way that I came across it, just so that maybe the viewers understand it from an investor's perspective, is I came across opportunity. The opportunity was a property that could only be sold in cash, and it needed to have a quick closing. So essentially, I needed to close escrow in 10 days. Otherwise, I wouldn't be able to do it. And the reality was that I couldn't go to a traditional lender because if I did, the traditional lender normally takes 30 to 45 days. Not only that, but a traditional lender would have required an inspection of the property, an appraiser to go out there to the property and physically go out there. And we didn't have access to the property because the property was owner occupied. Essentially, it was a smoking deal, but I didn't know what to do. I didn't have all of the money in cash. So therefore, I explored other options, and that's how I came across Chris. So maybe we could even talk about that first investment property that I did. Do you recall the property on J Street by any chance? It was I think it was like the first time that we ever did business. I think the acquisition cost was 270. Um,
Yeah,
and
I think that was a smoking deal. It was so easy to get the value on it, and you did touch on something that some banks they look at the property. There's health and safety issues. There's a lot of work that needs to be done, and they're just not going to make that loan because of the condition.
yeah,
But yeah, we were happy to help you with that transaction. I think it worked out well for you, and it was we work with some local companies that give us really good service, so we're able to get these things done right away. You had your profile is very strong, and you're bringing in a good. It's an equity play, so you had some good cash coming into the deal. So that was. That was a good introduction, actually. Thank you.
So essentially, they were able to help me on that deal because I didn't have all of the money to buy it cash, and I didn't have access to the property, and the seller needed the property to be an as-is sale. And a lot of the banks, as you know, Chris, will require the property to be in certain condition um, in order for them to fund. Would it be pretty safe to say that with the hard money loan, as long as you're getting it at a good enough price, that you can fund properties that need a lot of work?
Oh, absolutely. We'll actually even lend the reconstruction funds or the construction funds. And what we're able to do that the banks aren't able to do is we can look at the future value. So you're buying this house, you're getting a smoking deal on it, and you need to put $100,000 into it to bring it up to the top of the market. And it wouldn't make sense. We'd be lending you more money than what you're actually paying for the property.
Mhm.
But we can look at the finish value and then make a lending decision based on that because we know that the work's going to be done to the property to bring it up. So
Mhm.
yeah, that's another difference that the banks, they're not suited. Their hands are tied by the government regulations and whatnot, whereas we have a lot of flexibility in what we do.
Yeah. And tell me about like how much money like would somebody need as a down payment? Is that something that depends on the deal? Is that something that is just a certain criteria every single time? Like if I was a new investor and I came across a property that was 300,000, let's say that once I got done putting $50,000 into it, it was worth 425. Like how much money would be required essentially to close on that property, roughly? Or like percent wise?
I can give you percentages. Going into the deal, a lot of it depends on the borrower profile.
Uh-huh.
So if you've never done a flip before, then we're going to need to see that you have a little more, what they call skin in the game. So a little more cash into the deal. But our hard and fast guideline is that when you're done, we can't be at more than 75% of the finished value. So we've done deals, very skinny, where the borrower's coming in with, 10% down or 5% down. Maybe they're getting a really good deal, and the as is value would warrant that. But on a newbie, we like to see 25%. Somebody who've never done business before, they don't have a lot of experience on it. Then we're going to need to, that's our security for the loan is that cash into the deal. But it is on a deal by deal basis. We look at every deal. We try to make it work. If it makes sense, then we're able to do it.
Yeah, and then I think that one of the things that I liked about working with you guys is that uh, I had talked to a couple of other people, and I think it was just it almost seemed like it was just they didn't take a look at the whole picture, and they weren't willing to. From my experience in working with you guys, I remember you guys being flexible on certain things and saying, well, maybe if we do it this way or do it that way, then that would be a pretty um, then we can make it work essentially. So I remember you guys being flexible and willing to work with me, and that's one of the things that I like. Tell me, I mean, what are some of the misconceptions about your industry or hard money loans? Like, are like do I've heard some people think hard money loans are bad, or people have this negative misconception about a hard money lender that you never want to get one of those loans. What are some of those misconceptions, and how would you respond to that?
Yeah, well, I think the misnomer goes back for a long way. When private money or hard money first came into being, they had some unscrupulous people that they really were looking at a way to acquire property rather than make loans.
Uh-huh.
Uh, we're most of our business is repeat business. So, we don't want to go out and find new borrowers every time, do one deal and move on. We want to do many, many deals. So we really look at the project, and if we think it's not going to make sense for the borrower, then we'll point it out and say, hey, we don't think you're going to make money on this deal. Tell me why you are. Overcome these things. So that's probably the big misconception. The other misconception is it's very expensive, but you got to remember that you're borrowing this money for a very short period of time.
Hmm.
So if you're paying well over the bank rates, you don't really care because you're only going to keep the loan 6 months or 12 months. So the deal has to have a pretty good upswing in it in order to justify hard money. Otherwise, you can't take advantage of it. But it does give you the advantage of doing a deal that you wouldn't be able to do because you just didn't have the money at the time, and you have to pay a little premium for that. But if you actually look at what our cost of funds is, what we pay is private money. It comes from private individuals, and what the banks pay. So if you put your money in the bank, they're going to pay you less than 2%, and then they're going to loan it to you at 6, 7%. There's quite a big spread. We're actually working on a tighter spread than the banks do. So it's not expensive, and we certainly don't want property. If we get property back, then something went wrong with the deal. We didn't look at it properly up front, or something happened and the borrower couldn't perform like they thought they did. So we're really not interested in owning property. We're really interested in keeping good relationships with good investors in real estate, and doing the next deal and the next deal. Been at it for a long time. Want to keep doing it as long as I can.
I think you brought an important point, Chris. I think that it's always nice to have an extra set of eyes, because maybe as a new investor, somebody can be thinking that they're going to make a lot of money, and then they bring the deal to you asking for a hard money loan. Maybe they were using the wrong comps, but by having someone, an extra set of eyes to look at it, somebody who has uh, underwritten hundreds, maybe even thousands of deals, maybe you can point out some things and maybe even save some people some money by not getting into a deal. Because once you do all of the numbers and you factor in all of the cost in a flip, I mean, the margins aren't. People think, oh, he bought it at 300,000 and he's selling it at 450. He must be making a killing on it. But there's a lot of cost in renovating the property and holding costs for hard money loans and selling commissions for real estate agents. There's a lot of costs that sometimes people don't factor in. At least when I got into it, I didn't realize how many actual costs there were until I actually went through one and I did all the numbers, and I didn't make all the money that I thought I was going to make. There was still money involved, but it's just really interesting how you have to factor all that stuff in. I know that you guys do a lot of loans for people that are looking to flip properties. What are the type of loans does your company do, or what other situations can maybe like an individual or even an investor benefit from?
Well, there's a lot of special purpose situations where, yeah, for instance, you'll have some siblings that inherited a home from their parents, and one sibling wants to keep the home, and they need the cash to pay off, basically to dissolve the resolve the inheritance.
Uh-huh.
So we'll work with the attorneys, and we'll set up the financing, and it can be a situation. Typically, the situation is where the buyer is going to buy this property. They're fully qualified. They have the loan in place, but they can't close on it until they actually own it. You
Mm-hmm.
can't get a loan on a property you don't own, right?
Mm-hmm.
So we gap finance it. Everybody gets their money, and we have a deal where it's on our books for 30 days or less, and so we come in and we do something very quickly and are able to address that situation for people. We're seeing a lot of ground up construction right now. The banks still aren't real warm and fuzzy on ground up. They have a lot of different guidelines that they have to follow as far as the percentage of construction. So the borrower may have a lot of money in soft costs, and to get the project to the stage where they can start the construction and go vertical, and so they need to replenish their coffers, maybe get some of those soft costs back. So we're seeing a lot of the ground up construction because the flips are real tight right now. Not a lot of product out there,
Mhm.
and we're seeing the little additions where they're taking a two-bedroom, one bath, they're adding another bedroom, another bathroom. So there's a construction component to it, and we're able to come in and provide money for that. But yeah, I mean, we're very flexible. We look at lots of different things, and it all comes down to somebody needs some cash fast to make something good happen, and they're going to make money, and so we try to make a little money and facilitate the process.
What's a typical close of escrow time for you guys? Like, let's say on a flip property.
Well, we like to say 10 days. We've closed in as little as two.
Wow.
But that was a yeah, that was a situation where it was like J Street, right? The value was there, it was no brainer. They had all the title, escrow, the appraisal, everything was there. Their lender didn't have the money, so their lender couldn't close. So that's indicative of someone that's not a direct lender. They're a broker, and they're trying to sell the deal to a private guy in order to get the money. We're a direct lender, so when we tell you, we're going to do the loan, we have the money, we're going to close the loan, and you're not in that situation. But yeah, so we've done it as quickly as 2 days. We issue the docs one day, they sign, and fund the next day and close. So
Yeah.
can be done.
Yeah, absolutely. I remember when I did my first one, I was a little bit nervous and I was like, oh my God, like, are they going to close? Is this going to happen? Are they going to perform? I'm already in escrow on the deal. And I was very glad to say that everything worked out the way that we wanted it to.
Yeah, it's there's always the unforeseen, but we try to